welcome to another weekly financial update from RTS Financial Planning. This is where we look through some of the finance stories that have made the news in the last week and also discuss some of the subjects that our investment committee are looking at as part of the RTS investment strategy. So this week, most of the world's stock markets ended the week in positive territory, apart from Japan, which saw a number of companies reporting losses. There was good news on the economic front as the latest Purchasing Managers Index for the manufacturing sector for the UK, US and Europe all showed positive results, and that the economic situation is expanding and showing a strong recovery. There was even better news for the UK and US as the Purchasing Managers Index for the services sector also showed its fastest increase since July 2015. And this is positive for the US and UK as their economies are much more service focused than manufacturing focused. But then came a gloomy update from the Bank of England where they announced that the UK will be going through its largest contraction in a century. They kept interest rates on hold, but also said that the UK would shrink about 9.5% this year, and it might not get back to pre-COVID levels until the end of 2021. One of the UK's biggest companies, BP, actually cut its dividends for the first time in 10 years as it struggles to turn a profit from low oil prices. And just goes to show no matter how big the company, all companies can face difficulties at some point. But interestingly, BP share prices actually went up. And this was mainly because a lot of environmentally friendly investors saw in BP's reporting that they were going to move to more focused renewable energy and cleaner energy. Over in the US, it was time for most of the major tech companies to report on their earnings, and the likes of Facebook, Apple, Amazon and Alphabet all reported strong results. But these companies are now coming under increasing pressure from US regulators in particular over their size. Many governments feel that they've become too big and have too much influence on the world. And there's a strong chance some of these companies could be breaking up into smaller companies in the near future. Apple itself announced a stock split that will take place later this month. And basically what this means is that for every Apple stock you may hold, it will soon be split into 4 stocks. So if the one Apple stock you currently hold is worth $100, after the stock split, you'll hold 4 stocks worth $25 each. So the overall value will be the same. And the reason companies do a stock split is usually because the price of an individual stock has become too high to attract retail investors. And a number of retail investors invest in Apple stocks. A lot of young people are big fans of the company, so like to invest in the company. If that stock price becomes too high, it's hard for them to invest even in one individual stock. So Apple will be doing that stock split later this month. And another interesting move, particularly for US-China relations, Microsoft announced that it is considering buying the popular Chinese app TikTok. Donald Trump, US president, announced earlier that TikTok could be banned in the US over fears that US data is being sent to the Chinese government, who are likely to have some sort of share in TikTok's owner. But the US government has more pressing matters to deal with. It needs to agree a new fiscal package to help support its economy through the coronavirus. A number of the coronavirus measures it previously announced are coming to an end. So things like extra unemployment benefits to help support the economy. So it needs to get to grips with implementing a new package so it can keep assisting the US economy. There was even talk this week that US government debt could be downgraded, meaning that it will be seen as more risky to invest in. So that wraps up this week's update. I hope you found it useful. Please comment below on any stories that you find interesting and want some sort of comment on. Do subscribe to our YouTube channel because we provide a number of videos each week on various different subjects regarding financial planning and investing. Until next time, take care.